Hello everyone. So after the first 2 weeks in May, I am down 2.4% on my closed positions, but I've got two positions still open. So this month, which is pretty much like last month, it's been really hard to try to work out, okay, what are the strong currencies that I'm going to be long with to short everything else to, because there's no decent currencies it seems at the moment. Um, but that said, the two I chose this month that I'm going to be long with are the pound and the um, the US dollar. Now, if we talk about the pound, there's been loads of discussion about Brexit, and hence that's been driving the pound lower, amongst other things. On top of all the bad economic data recently, and the growth forecasts being degraded. But uh, last couple of weeks, the polls have been saying there's less and less likely for Brexit to happen. Also, interestingly, if you go to investing.com and you type in CFTC space GBP, this tells you what the speculative um, long or short positions are. Now look at this. So for 15th of April, say, it was at a negative peak. Now it's getting less and less. So I think this is people with less and less likelihood of Brexit. People are now unwinding their short positions, which is giving strength to the pound. So that's the main reason I wanted to be long the pound this month. And also because the pound has been showing relative strength recently, despite loads of economic data coming out being really negative. So it didn't make much sense. So this is the only reason I can think of that. Then regarding the dollar, again, fundamentally, its growth has been very mixed. But out of all the other countries, it seems to be the best of a bad lot. So that's why I chose those two. Um, what actually happened? Let's have a look. So also week one of May, I think I'm way over trading. Look how many trades I've done. Week two, I've got it back under control. I think I did one trade in week two. Compare that with, say, February. Here's what I did in February. I made 7.4% in February, and I did 6 trades the whole month. Two of them making 4.8 and 4.6%, hence my 7.4% return. So it seems as time goes on, I'm making more and more trades, which is, I suppose March I made quite a few trades. I made 7.9%. April I got it under control, lost money, but this as a week, first week is not great. I think I'm way over trading. Right, so let's talk through some of these trades then. Okay, so the first one, the dollar against Poland. Now, the Polish economy is looking pretty bad, and it's going to get worse. So I tried on the Monday to get in, but my stop was way too tight, so I lost 0.5%. Then I tried again on the Tuesday, and I'm still on that trade. So if we look at USD Poland, so on the Monday, I entered, got stopped. This is the daily, isn't it? The Tuesday, I actually got in at that point, and I'm still in the trade. Now this is in an upward channel, so my target is close to the top of the channel, but I've chosen that target because of this high volume area. So it's right in the middle of that, and I shall keep raising my stops as it goes up to be just below this channel. And we'll see how it goes. Either I'm going to get stopped out, or I'm going to hit my target. And at the moment, my stop is above my entry point, so I'm guaranteed to make some money, even though not much at this stage. So I'm happy with that trade at the moment. So next one, the euro yen. So I entered that on the Monday. Now the euro yen is a funny one. The the euro and the yen, they've got loads of QE, negative interest rates, economies are a disaster. There's no growth, it's deflation, etc. So fundamentally, they're both awful. Yet, when sentiment is negative about the market and people are a bit scared, both the euro and the yen are seen as safe havens. So even though fundamentally they're a disaster, they can often show strength depending on what the current sentiment is in the market. Whereas at this stage, this was purely a technical trade for me. So if we look at it, what happened on the Monday, so the euro yen. So I could just see it starting to rise. So I got in at some point. I think I got in about here, and it was looking good. And I was raising my stop using this as a support. So I was using this as a support. But then the bank holiday finished on the Tuesday, Wednesday. I think Japan were on holiday, and then once I came back, the prices collapsed and I got taken out. So that was a almost break-even trade. So didn't make much on that. But the thing about that trade was the importance of continually raising my stops, because when I did get stopped out, I made a bit of money. If I hadn't kept raising my stops and held on for longer, I'd have lost my whole risk amount. If we look at the next one, the pound Canada. Now Canada is all about the oil price. So I got in on this one on Monday as well. Let's look at this. So first of all, let's look at oil. So here's the daily. Now if we look at what's happening on Monday, oil started to drop from being at the top of its channel. And also, what's this? This is the weekly 55 moving average. So at this point, I was thinking I was negative oil. On negative oil anyway, there's still oversupply, and global growth there's no global growth. So why should oil be going up? There's no real reason for it. So as oil started to fall, that's very positive, my pound Canada trade. So if we look at it, that's the 4 hours. Let's go to the daily. So got in on the Monday and it's looking quite a good trade. It's got up nicely, went up to there, but then started dropping. And again, I was raising my stops. So last week I got taken out about there and made 1%. So not groundbreaking, but there we go. The thing that happened last week was oil inventories on Wednesday were suddenly a lot less in the US than expected, hence the reversal in the price of oil, and hence why I got taken out of this trade. My target was actually this high value area there. So that would have been a 4-to-1, 5-to-1 trade. So that would have been great if that had been hit, but there we go. So there you go. This is what happened after oil inventories were a lot less than expected in the US. Bang! The oil is back up to this resistance point here. So next week it could break out of there, or it could bounce lower. Again, there's no real fundamental reason, but where can it go? Look at this area here. If it gets above $54, I'll be really surprised. So it might go up to $54 and come down again, but we shall see. So that's pounds, Canada. I've talked about US, Poland. The pound USD. I got into this on Tuesday. Last week? Why did I do this? Pound USD. I think this is purely a technical trade because this is my two long currencies. So why would I trade one against the other? I don't always stick to my trading plan. I sometimes like the technicals. So here is the pound USD. In fact, I'm just going to pull up why I went into this trade. I'm just going to pause for a second. So every trade I enter, I always record the details of why I've done it. So here's the pound USD. Often I'll do this in a bit of a hurry, but as long as I've got something. So I'm short the pounds USD. Week UK data's just come out, and the dollar's strengthening on talk of a June rate hike. Again, that went away, but now it seems the chances of a June rate hike are getting bigger and bigger. So I wanted to short the pound against the USD. And on a 4-hour chart, this is what it was looking like. Let's make this bigger. So the 4-hour chart, fundamentally, I've got a reason to sell the pound against the dollar, and it's just broken out of this range that I'd drawn. So that's why I did it. If we look at what actually happened then, let's put this to the 4-hour. So here we go, it broke out, and it's actually looking like a good trade. But when did I get stopped out? Pound USD. I got stopped out the next day for effectively a break even. So on this one, I'm being too aggressive with dropping my stops as soon as I could. So I think I got stopped out on this bar. But if I'd been slower to raise or to lower my stops in this case, because I'm short, I'd still be in quite a nice trade. So again, there's something to be learnt there somewhere. But because of the current volatility, I am trying to raise raise or lower my stops to break even as soon as possible, because it seems sentiments can change so quickly. So maybe I haven't got anything to learn. Maybe I'm doing the right thing. Who knows? I don't know. Right, the other thing that I've tried this week or this month for the first time is adding indices to my trading portfolio. So I've tried the UK FTSE 100 and I've tried the US S&P 500. Now, both these stock markets, let's have a look at them. There's no growth. There's no reason why they should be going any higher. Loads of really negative earnings lately. So if we look at the S&P, so that's a daily chart. Let's switch to a weekly. It's close to its recent all-time highs. And this downward channel, even broken out of this downward channel. So it's up here, but all recent company earnings are all very negative. There's no, economic growth is terrible, non-existent, or you get very mixed data. Last week they actually had some good data. Retail sales were a lot better than expected. I think they're 1.3% up, but so many, most other figures are just negative or nothing, flat. If we look at the UK FTSE 100, again we go to the weekly. That's looking worse than the S&P 500. But again, it being in a downward channel, it's broken out and it's hit so on the weekly, here's the weekly 200. It cleared the weekly 200 for a bit, but it's fallen back down beneath it. So it's looking negative. So I really wanted to short the FTSE. So we switched to the daily. So just to talk about the FTSE 100 first then. What did I do? So this was on the Wednesday I tried it, and I tried it again on the Wednesday. The first time I did it, I was slightly nervous about where I was placing my stops because I wasn't 100% convinced that the amount of risk I was taking was definitely the amount of risk. If I thought, for instance, I was risking $20 and I'd actually got my volume wrong and I was risking $200 or $2,000, that's what I was worried about. So I got in the trade and I was watching it really closely, how the price was affecting my profit or loss. And I got a bit nervous and I eventually closed it so I could then sit back and double check what I thought was what I should be setting my volume to was correct. And then once I was happy with that, then I entered it again. So 737.50. So this was on the Wednesday. So Monday, Tuesday, Wednesday. So let's switch to 4 hour because this should have been a really nice trade. So I'm just going to pause it to get my facts right. 2 seconds. So on my first trial sale, that could have been actually a really nice trade, but it was hovering around and I got out. But it turned into a really nice trade. Then I got in later and then I got stopped out. But again, look at that, bang! It's dropped, but then it's straight back up. It's very, very volatile. So I still have a negative bias on it. If we switch back to the daily, that was the 4 hour. Switch back to the daily. So it's stuck in this horizontal range effectively at the moment, but I think it's going to go south, but we shall see. So that was the FTSE. So on my second bite, I managed to lose 0.7%. My first one was a break even. And then on the S&P, I lost 0.4%. I think that's going to be pretty much a similar pattern. Let's have a look. So on the 4 hour, the S&P on the 4th of the 5th at 11. 5th. So I was shorting around here and then it went against me. And look at that, it's just so volatile. Since then it's shot right back up. This is the 4 hour. And now it's heading south again. Really, really volatile. The switching back to the daily. So we're here at the bottom of this range. It could do in the short term, anything can happen. The retail sales figures from Friday could mean it'll start to go up again. The positive retail sales figures, but overall, I don't think it's looking particularly good. But again, it's always dependent on what is the latest data coming out of the market, whether it's generic things like retail sales across the sector, or whether it's company earnings, etc., or Chinese data as well is affecting this drastically, and also the price of oil is affecting this drastically. So very volatile, but we shall see. So what else have I done? Right, the other thing that I had a go at was some emerging markets other than Poland. So here I was looking at the Singaporean dollar. So I think emerging markets are not looking good. If growth is slowing globally, and if the US are going to raise interest rates, so these emerging markets, if they've been borrowing in dollars, they have to pay back more money. So this is another really good example where I'm setting my stops way too tight at the moment on some of these trades, or it could be just they're too volatile and I should be staying away. Maybe that's probably a more appropriate action. So the 4th I tried it, and the 5th I tried it. In both cases, I'm trying to be long the US against the Singaporean dollar. So let's find this index. Here it is. So here we are on the daily. So I tried to go long there, got stopped out. Tried to go long there, got stopped out. It's actually a really good trade. Look at this. That's an awesome trade. But I'm setting my stops too tightly. If we switch to the 4 hour, here's why I was interested in it. It's broken out of this range. So here I was trying to get in. But look at the ranges. Bang, bang. It's just really volatile. Even up look at this one. It's crazy, isn't it? So really volatile. So trading a currency like this, I think you either have to be don't enter at market, always then try to go for outrageous retracements, or have big stops. But again, the problem with big stops is then suddenly the currency has to move a long way to get any sort of risk reward. Where's this one going to go? So maybe a good target is this high volume range. Maybe it'll go all the way up to there. But yeah, that's if I'd been in that trade still, that would have been a good trade. So I wasn't necessarily unhappy about that. Um, right, so down to my last couple to discuss. I'm just going to pause it to pull up another chart. So if we look at what's happening to the price of commodities, so if you go to stockcharts.com and the symbol is CRB, so dollar CRB. So there you go, dollar CRB. You can see commodity prices are starting to fall again. So which made me very negative the Australian dollar. Also, the recent figures coming out of Australia have been shockingly bad. So, say for instance, if we go to the Forex calendar, let's go to the start of May, end of April. Let's go to the end of April, first of all. So, for instance, here we go. CPI quarter on quarter, expected 0.3%. It's actually minus 0.2%. So that this was a start of a regular pattern. PPI quarter on quarter, expected 0.2%, minus 0.2%. So the slowdown in China is really affecting the Aussie. If we look at the following week, have we got any red flags? Cash rate, I don't know what that is. The statement from the bank basically was saying that they're expecting worse than expected growth. There's also people are now speculating about negative interest rates in Australia. Retail sales were slightly better than expected at that point. But yeah, it's not looking good for Australia at the moment. And what do we have from last week? I don't think there was anything last week. Was there? No, there wasn't. Um, so yeah, so I'm very negative about the Australian dollar. So if we look at the chart for the Australian dollar, US dollar, look from the beginning of May, this is the daily chart. It's broken below this range, so this is why I've shorted it, and it's looking quite a good trade at the moment. It went down to there and it's bounced back up, so I've got my stop just below my entry point, and it's now continued to fall. My target is down here, so why have I got that as a target? Let's go to weekly. So it's basically it's been hitting the bottom here a few times, so that's why I've chosen it. So if that continues to fall, and if I get any opportunities for a good entry points, i.e. this consolidation and then a breakout, so I've just switched to 4 hour. If there's any consolidation and then a breakout, or maybe a retracement, I've put in the Fibonacci lines here, so that's where it is at the moment. I look for retracements between 50 and 75. If I like a technical pattern, I'm going to add to my position basically, because I'm still very, very negative. Also, talking about the strength of the dollar, if we look at the dollar index, here's the weekly. It's right at the bottom of this range until recently, and now as we approach a potential June rate hike, it's probably about 50-50 at the moment. The dollar started to go up again, which again reinforces why I am positive the dollar, and that's one of my long currencies at the moment. So yeah, so my Aussie US trade I feel positive about, and the other one that my only trade for last week, which is the US CAD. Again, I was feeling very positive about that. Oil prices were looking bad. US dollar's looking good. But because of that, look at the chart, it's looking nice. This is a daily, and it's dropping nicely. But because of the surprise US oil inventory, suddenly, bang, I'm out of that trade. But again, I still feel um, this is going to be a good trade. So yeah, with oil dropping, the USD CAD should be rising, i.e. the CAD's getting less and less valuable. So here's where oil inventories were better than expected. But look at that, it's starting to go up again. So I still really want to be long US CAD. The dollar's looking good. So it all depends on what happens with oil price. If we go switch back to daily, we're at this point here. If oil starts coming down again, then I'll look at that trade again. If it breaks this 200 moving average, daily 200 moving average, and especially if it breaks south of this channel here, I'm going to be very aggressive with my dollar CAD trade. So again, it's been an interesting couple of weeks. Sometimes it's been a bit frustrating, especially with like my Singaporean dollar. That's a great trade, but got stopped out, and it's still looking good. The trades I'm still in, my US, Poland, and my Aussie US, I feel positive about. So bring it on. Let's see what happens the next couple of weeks. One interesting thing that might happen tonight, China time, is a couple of weeks ago I was reading an article about how there could be more and more corporate bonds defaulting because China, the recent growth in China has all been fueled by debt, and a lot of these companies in certain sectors, for instance, energy, suddenly they can't meet their debt obligations, so they're going to start defaulting on bonds. If that starts happening, because they said that would start happening the 15th of May, if that starts happening, we could go into a real risk off situation next week. But again, it all heads to the interest. So here's to the next 2 weeks of good trading.